Hey guys, welcome to the SAT Show. Today's video is going to be a little bit different. I'm actually going to be showing you guys how to start investing and what a TFSA is and how to open an account and everything. So, over the last couple of months, I've spoke to many people, and the number one question that I get asked is, how do I even start trading? And people seem to have this misconception that investing is difficult. However, it's actually very, very easy. So before I get into how you can actually start investing, I kind of wanted to speak about the importance of investing and the impact that compound interest could have in your life. A lot of young people nowadays tend to spend their money on excessively eating out with friends or upgrading their devices or even designer goods. And the worst part is these are all depreciating assets, meaning they don't grow in value over time. If you were making an initial investment of $2,000 and was able to save $200 bi-weekly from your paycheck at an annual interest rate of 8%, which is the average return of the S&P 500 over a long period of time. Again, I will be showing you guys how to invest in this later in the video. And you let that grow for 20 years. You'll actually have $265,000 in your investment portfolio, $159,000 which was from interest earned. Now, for example, let's say that you decided to start investing 2 years later than you actually are. This value would have actually dropped down to $216,000, which is a difference of $50,000 just for 2 years, which is why you should probably start investing now, because financial freedom is not hard to achieve. My investment portfolio actually returns about 26% every year. So if I let this grow for about 20 years, I would actually have $3.7 million in my investment portfolio. Again, this is just to show you guys that financial freedom is a choice and it just depends on how much you save and you're able to invest over time. So before I continue, I would greatly appreciate it if you smash the like button for the YouTube algorithm and subscribed, as it does help support this channel. So now getting into how you can actually achieve financial freedom by investing. So the first step is you need to choose a broker. I suggest either WealthSimple or Questrade, and I will be making a future video on comparing them directly. However, I'll cut straight to the point. I would rather go with WealthSimple since it is commission free for Canadian stocks, and the conversion free for American stocks is about 1.5%, which is not that bad. However, if you are trading with above $10,000, I would suggest Questrade in that case. So after creating an account with the brokerage, they'll prompt you to create a TFSA, an RRSP, or a personal cash account. I do suggest going with the tax-free savings account, aka TFSA, because when you do decide to sell your stocks later down in the future, you actually won't have to pay taxes on the stocks that are held in your TFSA, and it won't be counted towards your income. I do want to also note the fact that you can't add an unlimited amount to your TFSA. There's actually something called the contribution room limit that you can find on your CRA account to know how much space you have in your TFSA. Another thing to note is that a TFSA also does not have any restrictions on when you can withdraw money. So whenever you do need the money, you could sell your stocks and withdraw it without having any drawbacks to it. So after opening up a TFSA account and depositing money into it, there's only one last step to go, and that's to choose your indexes and stocks that you want to invest into. Remember the S&P 500 that I was talking about earlier that has an average return rate of 8% per year? Well, it's actually listed on the Toronto Stock Exchange as VFV, the Vanguard S&P 500 Index Fund. Essentially, what you want to be doing is buying shares of this, and then bi-weekly when you add more money, you just continue to buy up the shares of this. And over time, as you can see, it has pretty consistent returns, and I do want to note that this is the least riskiest version of investment. So I'm just going to explain what it means when you're actually buying shares of the S&P 500 index. So index or ETF, which is pretty much synonymous, just means that it's a bundle of companies, not just a single one. And the S&P 500 just so happens to track the top 500 companies in the US economy, which means when you buy one share of the VFV, you're actually buying 500 different companies, but small portions of them. And this is why the rate of return is pretty consistent. However, this also does mean that it's less risky, so the return on investment is lower. Hence why the average annual return for this is 8%, whereas a tech portfolio might do 26%. So for those of you who think that the S&P 500 is boring and think that it's just a measly 8%, I also want to recommend TEC. This is another ETF on the Toronto Stock Exchange. However, it returns about 26% annually since it's a mostly technology-based ETF. However, this also does mean that it may be more risky and 26% might not be sustainable over 30 years. However, I do recommend this ETF as well. Alright guys, that'll be it for today. Once again, thanks for watching, and I would greatly appreciate it if you liked and commented for the YouTube algorithm, as it would help support this channel.